For more, I'm joined by Nancy Prial. She is co-CEO and senior portfolio manager at Essex Investment Management. Nancy, it's good to see you. So where do you see the most promising growth without the biggest inflation problems?
Right. So we think that we want to continue to focus on those areas of the domestic economy that will benefit from the spending that has already begun and that should continue. What I mean by that are the areas of reshoring of manufacturing, factory automation, the use of technology to solve problems. But we want to do that in a way that pays much closer attention to valuation than perhaps we needed to do over the last number of years.
So that's the key thing for you, valuation right now. Where are you seeing the best opportunities? Where should people be looking?
Right. Let me answer the valuation question first. We think it's that combination of growth and value that's really the most important right now. And we think that the conversation will turn from a pure focus on growth versus value to really looking for growth in unexpected places. One of the areas that we really find the best opportunities is broadly in the area of industrials or industrial tech. Companies that are providing the products and services that will allow us to rebuild our manufacturing base in the US, that will allow us to achieve the goals of factory automation to continue to drive productivity and margin enhancement, and that are doing that in a way where if they are seeing some raw material and pricing increases, they can pass those on to their consumers, their industrial companies, without totally disrupting the inflation front.
Yeah.
Some of those names would be a company like Benchmark Electronics, which I see you put up on the screen. They are a electronic manufacturing services company. They focus on healthcare, they focus on defense, they focus on industrial automation, et cetera, sells at about 16 times earnings, pays a dividend, solidly profitable. That's the kind of company we really like in this environment.
And the story you're describing is one I think a lot of people would happily get on board with. Benchmark is one of the names, Applied Industrials Technologies, AIT, Zuora, ZUO, Alphatech, ATech. These are not everyday names. Is that on purpose?
That is on purpose. Again, we think that there is an advantage to be looking for growth that's not already well recognized in the market. As I said earlier, valuations are becoming very important in this environment. We think that the impact, the longer term impact of the increased geopolitical conflict could be that overall market multiples compress versus what we've seen as an expansion in market multiples over really the last 30 years. That means you need to pay attention to how much you're paying for growth. And so if you can find companies that are benefiting from the strong growth themes we all understand, but are not yet discovered by other investors, you can benefit both from their earnings growth as well as the subsequent modest PE expansion they might get as they get discovered.
Shepard Smith here. Thanks for watching CNBC on YouTube.